Hey everyone, welcome back. So 2025 has been, I think interesting is a good word to use for tech stocks. We've seen some companies, especially some of the companies that have been really investing heavily in artificial intelligence. Those stocks have really taken a hit this year. But, that might sound concerning on the surface, but, sometimes when you see situations like this, it does open up some compelling opportunities for those of us who are maybe looking at a longer term horizon, maybe looking for an entry point. And that's what we're going to focus on today. We're going to look at two tech companies specifically, Walk and Datadog. Both of these companies have seen their stock prices fall pretty considerably from their recent highs, but they've also been leveraging AI in some pretty cool ways that I think suggest that there's a lot of potential for a rebound in the future. Before we dive into that, if you're enjoying the show so far, make sure to hit that like button and subscribe to the channel for more. So let's start off by talking about Block. You might remember Block as Square. They were, that company that really revolutionized the way that a lot of small businesses process payments. But Block has really evolved a lot. I mean, they've transformed into this comprehensive financial ecosystem, and AI has been like a key driver in this evolution. They basically operate through two main arms: Square, which continues to see all those merchants, a bunch of people tools, and then Cash App, their platform for consumers. And both of these segments are really integrating and benefiting from AI capabilities. But if we take a look at Block's stock performance recently, the numbers are pretty striking. I'd say year to date, the stock is down around 28% in 2025. And to put that into a bit more context, a pretty significant underperformance compared to how the rest of the market is doing. In fact, the stock is trading really 40% below its 52-week high of $99.25. So what's been causing this downturn? Well, there's a few different factors at play here. Investors have been kind of expressing concerns about the valuations in the fintech sector in general. There's also increasing competition in the digital payment space. And then on top of that, Block's holdings in Bitcoin and, their other cryptocurrency initiatives have been kind of facing some headwinds because of the volatility we saw in the crypto market earlier this year in 2025. But here's where things start to get really interesting. When we start to consider Block's strategic embrace of artificial intelligence, the narrative starts to shift. They've been implementing machine learning algorithms in some really key areas. For example, enhanced fraud detection. And that's obviously crucial for both their merchant and consumer platforms. They're also using it to improve their lending decisions for Square Capital. And then the last thing I'll mention is that they're also using it to personalize the user experience within their applications, which makes them a lot more tailored to the individual. So all these AI-driven initiatives, they're expected to lead to some serious improvements in their operational efficiencies. And what's really important is that they're also expected to help them expand their profit margins over time. And then when you add to that the fact that Investing Pro has given Block a fair value assessment of $86.98, well, that suggests a potential upside of 41.8%. If that wasn't enough, Block's return on equity is sitting at 5.6%. And that indicates their ability to generate profits from their shareholder investments. Looking ahead, analysts project that for the full year of 2025, Block is going to reach earnings per share of $3.62. And on top of that, they're predicting that revenue is going to see a really healthy increase of 11.2%. Now, Block doesn't currently offer a dividend to investors, but they do have a really strong cash position. And this financial strength means they have a lot of flexibility to continue investing in AI and other growth areas. Okay, so that's Block. Let's move on to our second company for today, Datadog. So if you think of Block as an innovator in financial technology, and think of Datadog as a real powerhouse in the world of cloud monitoring and analytics. With the way that everything is moving towards digital transformation, Datadog has really become a crucial provider for companies of all sizes. And the platform offers just a huge suite of different tools, things like infrastructure and application performance monitoring, which helps businesses keep their digital systems running smoothly. And they also have log management, which is essential for understanding and troubleshooting different issues. And then, of course, in today's world, you gotta have security monitoring tools. So they offer that too to help protect against those ever-evolving cyber threats. So you can see they're really covering all the bases when it comes to making sure that companies can manage their digital operations. But despite that, Datadog stock has also seen a pretty significant downturn. It's fallen about 23% year to date, and similar to Block, it's also down from its recent highs. Right now, it's sitting about 35% below the $165 mark. So what's going on here? Well, there's definitely a few different factors contributing to this. There's a lot of concern about technology spending in general right now because of the economic uncertainties, and high growth technology stocks, they just kind of face valuation pressures in general. And then, of course, we can't rule out the possibility of that. So investors are just taking profit after the stock had such strong performance over the past few years that, again, much like Block, Datadog's integration of AI, I think presents a pretty strong argument that it's going to rebound in the future. In fact, I think AI is actually one of Datadog's key competitive advantages. They've been weaving AI into their platform from top to bottom with a clear focus on providing actual tangible benefits to their customers. So what kind of benefits are we talking about? Well, for one, one, they're able to use AI to detect anomalies within complex systems. You'll identify unusual patterns that might be an early indicator that an issue is about to pop up. And they can also predict potential problems before they actually even impact operations, which, gives companies some really valuable lead times so that they can take preventative measures. And then the last thing I'll mention is that they can even use AI to automate incident response protocols. And that allows for much faster and more efficient resolution of any issues that do come out. So you can really see how they're using AI at a ton of value. And in addition to that, Datadog also has really healthy cash flow, and its profitability has been improving as well. There's also the possibility of that Datadog might be included in the S&P 500 index, which could attract a ton of institutional investment. And right now, analysts have given Datadog a strong buy recommendation with a mean price target of $159.48. If it were to reach that target, that would represent a potential upside of 44.2% from where it is now. Some analysts are even more bullish on Datadog, with the most optimistic price target being as high as $230, which is suggesting an upside at over 100%. Investing Pro has also given Datadog's financial health a good rating, which indicates that it has a solid underlying financial foundation. And looking back at their recent performance, Datadog's revenue saw a pre-impressive increase of 26.1% in fiscal year 2024, reaching $2.68 billion. And looking ahead, analysts are projecting a strong revenue growth of 18.9% for fiscal year 2025. So as you can see, both Block and Datadog have definitely faced some headwinds in the recent market. The stock performance really reflects both broader market trend and so company-specific concern. But I think what really makes these companies stand out is their strategic, and I'd even say increasing reliance on artificial intelligence and other innovative technologies. This focus, I think, really positions them well for future growth as all of these initiatives mature and start to deliver results. For those of you who are looking at a longer-term investment horizon, the current price declines might actually represent a really good opportunity to consider these companies, especially since they're both really focused on building their future with AI. So that's it for today's deep dive into Block and Datadog. If you found this analysis useful, please take a second to like the video and subscribe to the channel for more. I'll be back soon with more in-depth explorations of different companies and market trends. Until then, happy investing, everyone.